Hello and welcome to India Interacts, coming to you from the floor of the Bombay Stock Exchange. Today we are trying to analyze the Union Budget 2013-14 and get into some of the nitty-gritties in the areas of tax and the economy, infrastructure, and of course the stock markets, which is very critical from where we are coming. Joining me is also a very young and engaged audience, and who hopefully will be throwing a lot of questions at our panel here of experts and trying to see what this means for them and for you sitting back where you are watching this telecast. Joining me in our discussion today, let me introduce our guests. Rajiv Agarwal, CEO of Essar Ports. He also represents the FICCI co-chair for infrastructure. Ramesh, Damani, a well-known stockbroker, needs no further introduction. Sudhir, Kapadia, a partner at Ernst & Young, the tax firm. And finally, Ajit, Ranade, Group Chief Economist of the Aditya Birla Group. All of them in some ways need no introduction. Gentlemen, thank you very much for joining us today. So let me begin with you, Ajit, by virtue of representing the macroeconomic sort of sector. What are the 3 or 4 things that you've taken away from this budget?
Yeah, Govind, the macroeconomic backdrop to this presentation of the budget by the finance minister was the following. Number 1, we still have high inflation. Number 2, we have low growth, and it has declined steadily from almost 9% a few years ago down to 5% now. Number 3, there is a new concern, especially this year, about a widening trade current account deficit. That is the difference between imports and exports. And number 4, of course, is the concern about the fiscal deficit, that the government spending is much more than its revenues. So these were the 4 factors, I think, macroeconomic backdrop factors. And the budget was obviously always, there was expectation that the budget would address these. And of course, larger developmental issues and so on. So if you see the budget itself, I think on the inflation front, we don't see any very visible signal that shows there's a anti-inflation bias to the budget. In fact, if anything, it has expanded. Budget size has expanded by almost 16–17%, faster than the rate of projected GDP growth next year. So government spending is going to grow faster than GDP next year, according to the government itself, the budget itself. So clearly, that's not, there's no...
Does it matter where that expenditure is going? I mean, how
much flagship schemes,
yeah, defense,
yeah. The finance minister, he said that he acknowledged that spending was increasing, but he also said that this spending was going more towards productive capacity and productive spending. So therefore, hopefully this will generate growth in the coming years. But I think there is every indication that it might also be inflationary to some extent. Okay. On the growth side, so on inflation, we didn't see expenditure compression. But on the growth side, of course, I think there are several measures in the budget boosting growth. For example, measures like the infrastructure measures, housing, small and medium sector enterprises, so several growth initiatives. And on the current account deficit, really it's not about imports and exports. It's not about import of gold. It's really, that's a symptom. Really, the difference between imports and exports is actually the difference between domestic savings and investments. So he correctly identified it as a savings gap, and therefore there are a lot of measures to promote domestic savings. And finally, on the fiscal deficit, of course, the finance minister legitimately can feel proud that he met the number promised last year, 5.2%, 5.3%, and next year it's coming down by 0.4%. But we can, of course, discuss
whether
the details
or not and the numbers behind it. Okay, yeah. Ramesh, how did you go into this budget? And I'm sure you're looking at the overall paper or statement a little more calmly.
Govind, there's no Gangnam style party going on in the last street, you know. It's, I think since September we were very enthused. The finance minister made actually all the right moves in terms of reducing the diesel subsidy, encouraging FDI. But given the harsh macroeconomic climate that we have and the fact that you have a current account deficit, as he himself put it, you need $75 billion a year. So in order to get that, either we need a drop in oil prices, so that will make a current account deficit much better, or we depend on the kindness of strangers. People will have to loan us that money in FDI or an FI format. I see nothing in the budget to encourage them to come and do it, because we're not taking the hard decisions that one would hope Mr. Damani would have made.
What's the one thing that you would have liked to see?
I would just like to see opening up our economy. I mean, you can't do it in dribble and drabble, you know. Do some PSU privatization. Don't do disinvestment. For example, a few years ago, MTN was about a $4 billion market cap company. Today, it's under $200 million. You've seen wealth destruction in a company that is non-strategic anymore. Privatize those companies. Get a handle on the government finances. Some out-of-the-box thinking with Mr. Chidambaram is known for. He has such high expectations when he delivers the budget that I think this budget fell short of those high expectations.
And a lot of people felt that when he started delivering the speech, he was actually going to go in that direction. But then
that was the first line. That's the message we got. Yes.
Right. So, Rajiv, what about you from ports and infrastructure and then ports? Did you get what you were expecting from the budget?
But I think maybe this budget tried to balance a lot of things, and that's what is being talked about. So maybe that is well done, and we expect maybe that with the fiscal deficit coming to 4.8% or 5%, there will be some containment of inflation. Though we'll have to see. A lot depends on what gets implemented and how it gets implemented. See, the finance minister announced 2 ports and another one in Tuticorin, and he announced some 3,000 kilometers of road to be built on
by the government itself.
By the government itself.
And is that because the private sector has been walking out of
road because projects? We have seen, I think, though there's a huge expectation of investing about $1 trillion in the next 5-year plan, but we have seen a complete slowdown in investment from the private sector in the last few years, mainly because the investment which has been made in the past has to still start giving returns or has to really fructify, because a lot of these investments which are sitting in the power sector and investments which have been made in the telecom sector in the past have actually kind of not started giving returns. So looking at that, people are a bit conscious of investing, like Ramesh said that equities will be difficult to come in, but real hardcore investment into new projects, into new infra projects which take 4 or 5 years to come by or 6 years to come by, and don't know these days when you're not in control of when you'll get clearances, when it will happen.
So and then you're saying all of that has not been addressed by the budget?
No, that cannot be addressed by the budget because these are things which have to be done.
Outside, but you're saying neither in spirit nor in letter.
Yeah, but what we could have seen is there was some special incentive or some kind of inducement of maybe lower interest rates for infrastructure, because today a new infrastructure company borrows in an Indian market at 13-14%. You cannot build infrastructure in the country at that rate. Now, if these are PPP projects, so why can't they get at least the rate at which the government gets borrowings? Because these projects have to get some status where they are able to really build infrastructure for the country. So the real spirit of PPP has to be followed.
Right. Okay.
Yeah.
So, yes.
IDF will not help in any way.
See, IDF is after the projects, and IDF has just started. You are talking about $1 trillion of investment. That is 55 lakh crores. And IDF,
and you're saying several hundred projects still stuck with the Ministry of Environment for various reasons.
Yeah.
And I'll just make one related.
So on the tax front, give us a quick macro view.
Just one comment is that they have introduced this investment allowance, as we know, on plant and machinery. But I think the issue is that if projects are stuck up because of various other policy issues, then this investment allowance is good, but I don't know how much will
No, but that is only for the manufacturing sector.
Yeah, and that again is
it doesn't do anything for infrastructure.
Absolutely.
Right. So, Sudhir, if you were to take a step back, what's the tax regime looking like?
So there are two. Let me start with the macro tax.
Favorable, not favorable?
Well, the macro tax picture. First of all, in tax we say that no news is good news. So to that extent, the budget had no major surprises. There are quite a couple of them, but anyway, we'll talk about it. But I'll just take this point on the macro tax situation linked to fiscal deficit. There seems to be a sort of a huge amount of emphasis on the number of 4.8 next year, and which is very encouraging, no doubt about it. Now, my concern as a tax professional is the following. One is that when I read the assumptions made for the tax collections for next year, the assumption is that service tax collections will increase by about 35%. Over this year's collections. And this year's collections are higher by 35% over the previous year's collections. This year's collections can be explained because we moved to a negative list of service tax. We increased the base in 1 year, which is explainable. Now, if you are expecting 35% more on this, that means the government is expecting to have a lot of success with the amnesty which they have announced. So that's a big delta. If that successful outcome comes in, that's fine.
But you don't see overall service tax revenues growing?
Because the rates are not increased, right? So what is it, is the economy going to boom? So we actually calculated a tax buoyancy ratio. And on service tax, it is more than 2, which has never ever been achieved, ever.
So what does that
In the sense that, when you compare the growth in GDP, which is estimated, to the growth in tax, typically our ratio has been less than 1. Which means that when GDP grows by 1, my tax collections grow by about 90%. Despite all the aggression we see on the field, it's 90% of 1.9. Now we are saying 2.16 just for service tax, which I think is highly optimistic, but for that amnesty. So I don't know how much of, it depends on the outcome of amnesty.
I think the whole discussion
So I think to come back to the only point I would like to make, Govind, is that the assumptions on taxation, let me give you another very different statistic. The finance minister said in his speech he will collect 18,000 crores more by way of tax revenues by the measures in the budget, largely around surcharges. Total tax collections is projecting to increase by 2 lakh crores. So a lot of assumption on growth. So if growth happens, I think everybody will be smiling. If it doesn't, then I think the existing taxpayers, if it is the companies really, India Inc. as well as the MNC subsidiaries, will have a greater harrowing time next year than they are even having today.
Right. So I think the issue of numbers is an important one. And maybe we've come to it a little early, but let's address it quickly. Ajit, you two, I'm guessing, have some concerns about the assumptions.
Yeah, like Sudhir was saying that, the deficit for next year is going to be 4.8%. And what has happened is taxes are projected to grow much faster. Expenditure is also growing, but the gap is narrowing. But that rests on really some heroic assumptions. He mentioned service tax. Let me give you another example. The taxes are both indirect and direct taxes. So one major component is excise revenue. Now we know that industrial growth is the biggest concern. When I said growth is slowing down in India, industrial growth is less than 3% and manufacturing growth is almost 0%. And excise taxes are collected from in the industrial sector. So this year, excise taxes grew at around, I think, 30% or so. But again, because of what Sudhir has said, that last year there was a big change. During the previous finance minister's regime, excise taxation went up from 10 to 12%, which is a 20% increase. And that directly translated into benefit for the government. Next year, where are we going to get this from? Because unless the industrial sector grows by, let's say, at least 8%, we are not going to, in real terms. Okay. So there are some heroic assumptions. And then, of course, it is investment and non-tax proceeds to go up by 55,000 crores.
Spectrum options.
So these are, there is a big gamble on growth, I must say. So as Sudhir said that, unless the GDP of the country increases by something like 1.5 lakh crores, which is 1 full percentage point more, I'm saying 1.5 lakh crores in excess of what it grew this year. That is the GDP growth rate going up from 5 to 6.5% in real terms. Then only we will get these benefits.
So Ramesh, how is the, so markets have also been looking at the macro picture more than anything else in the run-up to this budget. Is there equal sense of disbelief about numbers and about what can this deliver? And is that why the markets are really not galloping away?
I think so, Govind. I think the number that the market worries about is that 20,000 seems the high plateau mark for the index for this year. Because we're going to be the retail investor, that was one chance he missed, was infusing the retail investor base back into the country, away from his lust of gold and real estate, which is not really productive for us.
What else could he have done? I mean, you have the RGESS.
I give you a good, the RGESS, needs imagination, okay? You need to get someone from the cell phone companies to market the RGESS and say, if you have a cell phone, you have a KYC already done. The next PSU disinvestment comes, I'm going to give you shares of Hindustan Aeronautics or whichever one at a 30% discount. Immediately people will come in, profits will be made, buyers will come, sellers will come. There'll be so much excitement around this thing. Our demat holding is now 1 per 100 to 2 per 100. It'll go up to 25 per 100, and maybe the goal should go up as high penetration as we have for telecom companies. That's the kind of fire he needs to light up. Because other than that, as I told you, it would depend on the kindness of strangers, the neighborhood to give us money. If they don't give us money, there's no opposite party to buy. We're going to have a very, very long year.
And we've had pretty strong foreign institutional investment, almost 24 billion last year. To what extent has that been balanced, if so, by domestic investors?
Actually, they've been selling. I mean, mutual funds have faced redemption. Retail investors, any broker will tell you, is non-existent on the last street. This used to be a very vibrant place. It's a pretty deserted place right now. So, unfortunately, we've not created the retail ethos that we need to create. And that is hurting us big time right now.
Okay, so we're going to talk about that a little more and what can be done to it. But we're taking a break here. Stay with us. Welcome back. You're watching India Interacts, coming to you from the Bombay Stock Exchange, and we're discussing the Union Budget 2013-14 and what it means to you and all of us sitting here. So, Ramesh, before we went into the break, you were saying that there's not been enough done to really revive the equity cult. Now, this term has also been used frequently and over the years, and maybe there have been small doses of government intervention or policy intervention, and maybe there haven't been. But have the markets tended to follow the lead of policy triggers when it comes to, participation or liquidity and so on?
I mean, the government has it was Mr. Chidambaram who made long-term capital gain zero. Okay, there's no greater incentive to create wealth than to invest in equities. He's made dividend tax-free in the hands of the consumer. Great benefit. Unfortunately, the retail public has not been fully cognizant of the fact, maybe due to volatility, maybe due to a lack of education. I think you need to kickstart the process. You need the 100 crore Indians. We need to get 40 of them, 40 crore into the Indian equity markets. And I'm telling you, give them shares. It doesn't matter. The money will come back to you as taxes, service tax, STT. Kickstart the process. I don't know how many of these kids in your audience have a demat account. But if they had a demat account, they would all look at stock prices. They would all be looking, if they made 5,000 rupees, they'd be trying to make the next 5,000 rupees, which is what we need, a domestic investor base.
So what are we losing because of not doing this?
Because then we depend on the kindness of strangers to fund our current account deficit all the time. If these people are investing and saving, it would bring the current account deficit down. It would, encourage a retail base who take a second view of the market. When the foreigners would be selling, they would step up and buy if they found there were bargains. Right now, because of the lack of buyers, we see stocks going down 10, 15% with very poor volumes. So you need to create a strong retail base, either through mutual funds or through direct investing. But by not doing that, we risk having permanently shallow markets and permanently exporting our markets, like the SGX trades, say, for example, in Singapore. So we need to do those things.
If I can just pause here, Govind, and a question, see that I can understand that there is reluctance to invest directly in stocks. And, from my knowledge in the US, for instance, a large part of the retail participation is through mutual funds. And in my view, at least, the mutual fund industry is very well regulated in India. SEBI has, given a lot of comfort to most, investing public, most members of the public. And assets under management have been growing. Now, what can we do to what is ailing that industry, or what is the trust factor was lacking perhaps in the initial stages? But today, I don't think that's an issue. So the question to be asked, and just to link it to that one tax measure, now you have a 25% dividend distribution tax on income funds. Clearly, it is aimed to encourage people to invest in equity rather than a debt fund or an income fund. So they have done that as well. So isn't the larger question is that why is there reluctance to invest in greater numbers through the mutual fund route? And talking about Rajiv Gandhi's scheme, why do you need a separate scheme?
You don't need a demat account for a mutual fund.
Yeah.
In fact, there was a time in the 70s, 80s and 90s when people were investing, individuals were investing, every guy was investing in the stock market. I think in the last 10 years probably, the people have felt that maybe it's too volatile. And that is one of the reasons.
Between equities and funds?
There's a lust for real estate and gold in this country that is unexplainable to me.
And insatiable.
And you're getting in at the higher ends. Yeah. Typically a retail investor, drives looking at the rear view mirror, not forward. So he's looking what has done well in the last 5 years. Gold has been stood out. And because the government has not given good interest rates in terms of deposits, it's negative real rates. So people move into gold. And real estate, because that's, it's all, it always goes up, it never goes down. That's the theory at least. Until it got disproved in Japan in the 1990s, in 2008 in America, real estate goes down seriously, folks. It happens. So, my education, I think that's the only thing we can do. And kickstart the process. Mutual fund, the gains are not immediate. You see what happened in Russia or Mongolia or any number of countries. When they privatized, they gave vouchers to citizens, and that was instantly encashable. So anyone who makes 5,000 rupees, and that's a lot of money in India. It may not seem a lot from Dalal Street, but 5,000 bucks is a lot of money from people in India. You'll have people queuing up to buy shares, finding out what the next idea is. What I'm saying is that you need a big idea to kickstart the process.
And you need good paper, which is sort of
good government paper. Give a government paper. People
and that's worked in the past.
It has worked in the past in many countries. It could work out here. A kid making, 21-year-old kid with a phone is registered with you. You have everything he needs. Just give him 50 shares of Hindustan Aeronautics, to give you an example, at a 30% discount. He will sell it back, come back, pay taxes, pay SCT. You have a demat account for life. You bought him into the net.
Right. Okay, let's get some questions from our audience here. Yes, ma'am.
मेरा अजीत सर से क्वेश्चन है कि इस बजट में हमें महिलाओं के लिए कुछ देखने को मिलता है, युवाओं के लिए, लेकिन किसान के लिए कुछ नहीं मिला। किसान के लिए जो खाद पे सब्सिडी मिलनी चाहिए, उसमें ऐसी कोई बात नहीं कही है। इस बारे में आपका क्या कहना है?
In English, whatever.
So the question is just like something for the women, what for the farmer? एक तो बात है कि for the farm credit, agricultural credit, has gone up to 7 lakh crores. I think more than 7.5 lakh crores. So there is a substantial increase in credit flow to agriculture. This is the same finance minister, by the way, in his 4 years ago, he had announced that he's going to double agricultural credit, which he did. So I think definitely there's concern about agricultural credit from banks. Secondly, he's introduced this concept of farmer producer companies. Corporate sector, हम लोग दलाल स्ट्रीट में हैं, यहाँ पे companies. So similarly, like a common stock company of farmers, जिसको farmer producer company बोलते हैं, the government will make an equity contribution into these companies. These companies are just, it's a new concept, it's nascent, but this is another example of something for. Then of course there's a variety of other measures like on extension seeds. He also mentioned that minimum support prices have been consistently going up, and that is out of concern. I think personally I don't agree that price incentives always work. So, there is enough, I think, for agriculture. Of course, more could have been done. And we have, in the state of Maharashtra, we have currently a huge distress. So, of course, there are parts of India where agriculture is doing very badly. But I think at least from this, and remember, agriculture is a state government subject, actually. So, usme state government ko bhi karna padta hai.
Okay, more questions? Yes.
So as you know that trading in thousands of companies have been suspended in the exchanges, and lakhs of crores have been blocked because of that. Sadly, SEBI hasn't done substantially to recuperate the scenario, and moreover, there hasn't been any relaxation in the STT on the cash segment. So don't you think all these factors will actually act as impediments to increase in the retail participation?
Yeah, STT has been reduced for futures and not for cash, but it's a very nominal transaction tax that you have to pay. In return for that, you're getting short-term capital gains at 15% and long-term capital gains at 0, okay? So, if you can hold a stock for 2-3 years, and that's what you should be doing at this young age, that's the great way to create wealth. I mean, you should get out of that short-term thinking and saying, I want to buy today, sell tomorrow type, but invest in a great business for the next 3-5 years, or to finance your marriage, finance your children, or finance the future retirement. So, I think they've actually created a good platform. Unfortunately, they just need to kickstart it now by making long-term capital gains tax-free. See, when you put it in fixed deposit, you get some safety, right? But you're getting a negative real return because inflation is greater than the fixed deposit rate. But on that also, you're paying a 30% tax rate if you're the higher tax slabs, right? Whereas in equity investments, you're getting dividend and long-term capital tax-free. If you can just bring your focus and attention, you realize how much more lucrative it is, despite paying small amounts as STT.
Okay. One more question. Yes.
Sir, my first question is the Rajiv Gandhi equity savings scheme. It was initiated in the last budget, but it was implemented 20 days before the current budget. So it was a main scheme in order to motivate the retail investors to invest, but that is only taking a lot of time. So do you think we should really depend upon these budgetary measures? And my second question is about the taxing the super rich. Taxing the super rich, if you tax the super rich, do you think they really invest their surplus money back into the economy? So what's your view on this? And then my third question is, in a recent article it stated that only 42,800 people in the 1.2 billion population accepted that they come under the 1 crore tax bracket. Do you think this number is good?
Yeah.
Good or bad? I think so we'll leave Sudhir to answer the tax part, and I'm sure he has views. Yeah, Ramesh, the first one.
It's a bad statistic. A country of India, I'll say for 42,000, but a lot of people get exemptions from long-term capital gains or whatever. The other part of your question was...
the first one is RGSS. You said that it was really operationalized only 20 days ago. Was that your question?
Yeah, it will start. I'm just saying kick-start it, you know. Don't make it complicated and converted, 50,000 rupee first time, you know. Force people to get shares, put it into their demat accounts. And the second part was, what was the question?
Super rich.
Yeah, super rich tax, you know, for 50 years in post-independence India, since I've been following budgets and even prior to that, every finance minister has gotten up and done two things. He's taxed the tobacco companies, taxed cars, and taxed the rich, quote unquote rich. I was hoping it got on this class warfare system in India that, oh, the rich, let's tax them, they don't care, their money doesn't count. You know, clearly we haven't. They save it for 1 year. I don't think, Mr. Kapadia will tell you, it's probably going to continue for the next few years at least, the tax of the super rich. You know, we should all pay our fair share. I think there's a saying that taxes are paid, nations are made. So, you know, I hope we all pay our fair share. But I think the goal as the economic survey should be that we increase the tax net and make a fairer tax administration. I think I'd be happy to pay whatever government decides, provided there is a fair and efficient tax administration system in this country.
Sudhir? I think just to add, you know, put it in perspective, see, 2 years ago, the surcharge on income tax...
This can be called the Azim Premji tax.
This is I think he calls it Azim Premji, yeah. But just to put this in perspective, that 2 years ago, the surcharge on individual income tax at the highest bracket, over 10 lakhs of rupees, not 1 crore, 10 lakhs, which was prevalent, was removed in the wake of the fiscal stimulus. When excise was brought down, this was also eliminated. Otherwise, this was always there pre-2008. And all that has happened is that surcharge has come back, albeit at a much higher level. And the rate, therefore, becomes, you know, about 33%, kind of similar to the corporate rate.
Plus 3%.
No. I mean, the 10% surcharge, it is already 31 today.
Okay, so 31 to 33.
Yeah, okay. So it's already 31. I'm saying that surcharge has come back. People have forgotten that there was a surcharge which has come back at a much higher level. So by itself, frankly, it's not something which that bracket should, you know, quibble about by itself.
I think no one is quibbling. At least I haven't seen anyone quibbling.
So I think the two other related points there is the following. See, one is that this is on what I would call, largely speaking, earned income and not unearned income. Out of this 42,000 people, my bet is 90% will be salaried earners because they have nowhere else to hide. So first is that long-term capital gains, the Damani said, is exempt. Dividends, the tax is paid by the company. And the individuals who receive the dividends don't pay tax. For the small shareholder, that's a fantastic design and objective. But if I am a promoter of my own company and I own 100% of that company and I am in the highest tax bracket, I will not pay myself salary and I'll pay myself dividends. The company will pay 18% dividend distribution tax, and that's the only tax. So I have halved my tax liability by getting my company to pay dividends to myself.
So you're saying this will affect mostly the individual earners in that bracket?
Absolutely, absolutely. That's the only. Founders. I don't think it will get. Our calculation is, I think the budget estimates, sorry, not our, but even the budget estimates is budgeting some 3,000 to 4,000 crores of additional revenues on the account of this surcharge. So frankly, it's more, you know, playing to the gallery than anything else. But fine, that's one level of it. Sorry.
Just to add to this, basically 42,000 people declare a taxable income of 1 crore and above. Dividend income is not taxable. So there are people who are earning more than 1 crore, but it may be all in the form of dividend income.
Right. Okay.
So I think that's debate, probably that debate needs to start.
This was an optical thing that had to be done?
I think it is an optical thing. Just to put one statistic in perspective, the US has increased the tax on dividends from 15% to 39.6% last December. Of course, that's created its own sort of, but they have done that. And long-term capital gains from 15 to 20 in the same spirit. But I have one other point, there, Govind. What I found a bit strange in the finance minister's speech on the super rich, in the super rich paragraph, that he has clubbed super rich companies with super rich individuals, which is a bit strange because this concept of a super rich company, a company earning more than 10 crore is super rich. I mean, it doesn't really gel. Secondly, world over as a tax policy, you would actually have lower rates for corporates and higher rates for individuals, because the most difficult part, people who have done business would vouch for is, risk capital, 5% success ratio, 95% people fail. So you want to encourage entrepreneurship and not have higher rates for companies. So that concept of having, we have increased the rates actually, the surcharges, let's be clear. It is an increase in the corporate, it's an increase in the corporate tax rate to 34%. Add the dividend distribution tax, it comes to 40%.
Right. So we'll take a break. Ajit,
just a quick point is that people are rich, not companies. Companies create jobs, But people are rich, people are poor, people pay taxes. Companies are inanimate objects, I think. Okay. So like he said, they create jobs. So
on that note, that companies are inanimate objects, they should not be taxed at least heavily. And the point that Ramesh Damani, I think, has left for us from this segment about ensuring that paper gets created, as in government paper, IPOs, disinvestment or divestment, or even privatization, being one key or important trigger for the revival of the stock markets. Let's take another break here, but we'll come back and now try and understand how all of this could lead to a better year ahead, if so. Welcome back. You're still watching India in Tracks, coming to you from the floor of the Bombay Stock Exchange on the Lal Street in Mumbai. Still with me, my guests, Rajiv Agarwal, Ramesh Damani, Sudhir Kapadia, and Ajit Ranade. We've also got a lot of questions from our young and engaged audience here. So let's begin with the first one. Yes.
So for the growth and the development of any country, investments are really important. But with the increasing taxes and the additional surcharges, don't you think savings are really hit hard? Like, how can a common man even think about investing after?
Okay. Yeah. Next question.
If I'm not wrong, this budget allocates around 65,000 crores for the education field. So as a student, I would want to know, how does this translate to education loans?
Okay. I don't think it does, but yes.
Sir, there's a problem with gold import. So our jewelry has been relaxed. So would it not create more pressure on current account?
Okay. So who wants to start off?
On the investment, Ajit. I can say the first question was how do we promote investment?
Is this an
investor friendly? Yeah. I mean, clearly, actually, the big challenge before India right now is how to revive investment, especially in the private sector. It can come both from public and private sector. And investment spending needs more than interest rates or other things. The biggest kicker is business climate, business optimism, the feel-good factor, and vibrancy, and of course, enabling economic reforms and policies. So I think that's a huge challenge. The government, I mean, this budget has tried to introduce some, like I said, there's specific focus on infrastructure, which we heard earlier. There's specific focus on the housing sector. Housing actually creates also jobs, because construction is a big industry. It also creates demand for the downstream industry like white goods and so on. So there are measures, and there, of course, there's a focus on the small and medium enterprises, like I said. But we'll have to wait and see. See, we are living in a world today where the global GDP growth itself is very tepid, 2 or 3%. And there are many countries struggling with 10, 15% unemployment and very low investment. So India is not insulated from all of that. But I think we are likely to see better growth next year.
But what's the Aditya Birla Group view on this? I mean, how did you?
No, because we have large investments already in the pipeline. Expansion, factory expansions, in fact, greenfield expansions, and so on. And these are multi-year projects. So once the project starts, actually, it doesn't depend on business cycles like this. Of course, sometimes it gets delayed because of clearances and sometimes environment clearance and so on. So, but we are constantly, and we are present in other countries as well.
Okay, so you don't have a bank license as yet, but there was a bank question. What about education loans? Is that likely to? No,
like she said, 65,000 crores for education sector. But remember, it's more about primary and secondary education. Sarva Shiksha Abhiyan is about, it's an abhiyan, it's a campaign. Then there was also a focus on secondary education.
And he mentioned a midday meal scheme, which also takes up a lot.
Midday meal scheme is also actually an education budget, you're right. Yeah. And then, of course, apprenticeship and all that. So I don't think there was any mention of education loan per se. So
okay. Jewelry imports, does anyone want to respond on that? Sudhir? The question was, jewelry imports have been liberalized. So right. is that counterintuitive to the fact that we want to slow down on gold imports? Did I get that right?
Yeah, but I think if I understand, it's jewelry, I mean, it's also a sector and an industry which needs to be encouraged. It's different from just buying gold for the sake of holding. I think the whole issue is about, and the investment, the dead investment is in the holding part. To me, jewelry is consumption. So whether you go to a hotel or a movie or buy jewelry, anything which adds to consumption, as long as it comes in the prospective GST net, it's not bad.
So, I mean, since you mentioned GST, were you looking forward for any more? Or
I think it's some good, helpful signs. Again, 9,000 crores, you could say, is too less. We have so many states. One state has already said, we need 3,000. We have made a claim of 3,800 crores already. So what is 9,000 crores? So, but I mean, the thing is, it's a good start. I think there is confidence now that this will come through in a year's time. That's what the sense one gets. So I think that's a good start.
Right. And we still have to discuss what the outlook is and what really this all means. Any more questions? Yes.
My question is for Ajit sir. I want to know that in India, the inflation is calculated on the WPI index, but how accurate is that? Because an average Indian doesn't buy it from the wholesale market, and the transportation cost is not included in the data which is calculated on the basis of the WPI.
Yeah, got it. Okay, next question.
When it comes to FM channels and radio stations, they are currently in a trust. But the question here is, what is the sustenance and the allocation that's been given to the community radio?
Community radio, okay. Behind you?
What do you think about the safety net that the SEBI should include to the new IPOs coming? So it will, increase the trust of the later investors on.
Okay, so let's start. I think Ajit, you were answering. Ramesh, do you want to begin with that? Do we need a safety net? There is a safety net of some sort in some cases.
There should be. I mean, some of the IPO performance in the secondary market have been an absolute disaster.
But wasn't there a safety net concept earlier?
I think they just introduced one recently. Okay. I'm not completely familiar with it, but they have introduced one recently. But more importantly, the merchant bankers, should be bought to book. I mean, if they don't know how to price an IPO and it's down within 1 month of listing 50%, I mean, someone has to throw the book at these people. That's the best way to discourage it. Give them monetary penalties, ban their licenses. I mean, some action like that, clear and visible deterrence. I mean, that is part of the reason the public doesn't come back. They've been so scared with the volatility and being caught with the lemon. They don't necessarily have the expertise to do due diligence.
But this is again the spirit of price discovery. Price free market is falling.
No, but I think it's a bit too lame to say that, we priced it at 400, it's now $50. Sorry, price discovery is free. I really don't think that's fair. I think someone pulled a fast one out here if that happens. I understand if the indices have fallen 20%, your stock falls 35%, I can deal with it. But if the indices are flat and you're down 80% post IPO, that violates the spirit of any free markets,
But how can the regulator really get into something like this? And should
book the merchant banker. I think if you price it so poorly, that the company 2 quarters afterward is showing bad results, or and you price it 400. See, you can always use informed judgment. I mean, I'm not saying you can make ironclad rules. You can use informed judgment. Regulator can call a merchant back and rap his knuckles, saying you're very displeased with this happened, and if it happens again, your license is at peril. You can use moral persuasion. You don't necessarily have to use, throw them behind the bars. But, you have to do something. I mean, you can't have an IPO down 90%, and come with a straight face, say, hey, sorry, bad luck.
And you're saying, according to you, it's really adding to the litany of complaints or concerns.
I mean, the public is right. I mean, why would they invest in IPO if there's no confidence in this thing? And that's been across the spectrum with merchant bankers. Even the blue-blooded ones.
In general, I mean, if you were to wear your stockbroking hat, what would you recommend people should do at this time? Very broadly, IPOs or secondary market?
Generally, the bargains are now in the secondary market. The IPOs are not necessarily the best quality, and they're not well-known companies because the market is so bad, no one is coming out with an IPO going. The secondary market does offer opportunity, but I think 2013 will be a long year.
Okay. When you say long, you mean?
Tough.
Okay. Ajit, on WPI, definition of inflation.
Yeah, that's true. I mean, see, the headline inflation uses this thing called the wholesale price index. It's an index, which means it's an average of some 300-400, I think 500 different commodity groups, items. And of course, 500 items are not representative. And most importantly, it's a wholesale price or it's a producer index. It's not a consumer index. A big part of India, consumers are actually facing food inflation, which is not adequately represented here. But it's not meant to. I mean, if you're living in a city like Mumbai, in the last 12 months, you had 2 taxi hikes, taxi meter and rickshaw. So if you are going to be, paying taxi and rickshaw fare every day, you are experiencing 20-30% inflation. Wholesale price index inflation is only 7-8%. So you're right. But this is what we have been following for a long time, and they are refining it to make it as representative as possible. The other quick question was on FM radio. Yeah. Actually, now the finance minister thinks that every town in the country which has a population of 1 lakh or more will have an FM radio station, which is fantastic. And community radio stations.
Information and Broadcasting Ministry thinking and Finance Ministry saying.
Yeah, actually, you're right. I mean, it's
perhaps.
But there was a tradition where the FM, when he made a speech, it was not merely about the statement of account.
When you say FM, you mean Finance Minister.
The Finance Minister, sorry. It was on behalf of the entire government.
Yeah.
But I think it's a great thing because I think the licensing, probably Govind, you're the best person to speak about this. The licensing has become much more easier, streamlined. And community radios are really proliferating. I know in states like Jharkhand and Chhattisgarh, there are a lot of community radios which have come up, community FM radios.
Right. Okay, let's take another break here, but we'll still come back and continue and ask the fundamental question, what does this mean for the year ahead till the next budget? And we've also got elections around the corner. Is there something that we should be either concerned about or watching out for? Stay with us. You're watching India Interacts. Welcome back. You're still watching India Interacts, coming to you from the floor of the Bombay Stock Exchange. Still with me, my 4 experts, and we've got an engaged audience who's been asking a lot of interesting and insightful questions about tax and the economy, the rate of interest, the rate of inflation, and much more. We're now going to ask more the bottom line questions about what the budget really means and what lies ahead for the year. So, Rajiv, let me begin with you. I think we've gone through some of the specifics. We've also talked about the macro picture. What does this really mean for you as Essar Ports, as someone in the infrastructure sector, as someone who's investing in this economy?
See, what we feel is that we have some ongoing projects going on. So there is investment which is taking place, and not only we, but many of us are watching now, and we would like to see that how clearances come about, how these projects can take shape, and how this year and the next year are going to be. And then they will decide about further new commitments, new investments to come into the field. So I think it will be very, very crucial for the government to see that they facilitate these infrastructure projects, because at the end of the day, like education, like healthcare and all these, this infrastructure is the basis of everything in the country. And I think if infrastructure sector could be kicked up, then I think the growth rate will definitely go up. And you know, if you look at many of the companies which are in the infrastructure sector, many of them have been in construction or building space, or maybe they have been in the manufacturing space, and how things are panning out in those sectors impact these companies also. So I think everything is interrelated, and you know, mostly the companies which are in the infrastructure sector are also, you know, facing some issues here and there. So I think overall it's the feel good, it's the policies, it is the way you know, the whole atmosphere improves.
So you didn't get a sense of feel good?
No, that is something which you cannot get from the budget. You know, budget is only a framework which specifies, okay, what could
income
be
and
the
expenditure.
Yeah, income and expenditure, what would be the deficit, what can be the direction. But eventually a lot depends on implementation, and it will depend on how the entire government functions. All the constituents of the government have to really put in their efforts to really make it happen.
Okay. Ajit, what's your sense? You know, you're a large industrial conglomerate.
Yeah, but you know, like I think Ramesh also said, this is going to be not an easy year. Even though the IMF has said that globally the outlook is getting better compared to 2012.
So that was my question really. So are we also seeing a cyclical upturn in many industries?
So we are seeing definitely a rather slow movement, but I think the outlook for growth, both industrial growth and services, agriculture of course depends on monsoon, is better than last year. Last year was really very bad. So, but I don't think we are going to see a very big uptick. You know, the days of 8% growth, we'll have to wait. I mean, GDP growth of 8 or 9%, I don't think it's going to be easy to get back to them. But even if we get, let's say, 7% growth for GDP as a whole and 7 to 8% growth in industrial sector, that will be a big positive. Chances.
So are you seeing the signs? I think that's the question.
There are some early signs, but I think we are not seeing really 7%. We are seeing more like 6.5%.
Okay.
Of course, a big positive would be if oil prices internationally stay stable or even come down, which some people think is likely. Right. That will be a big positive for us.
Ramesh, outlook?
Two things, Govind, that the
You
market...
said it was tough, but yeah.
It's a tough year as things stand now. The two things that... one thing is, Ajit said, oil prices come down. That changes the balance sheet of India completely. So there is a case to be made that oil price could be $80 a barrel and not 120 that they are now. That happens, that's a huge, huge benefit. And I think the bets would be off. You'd have a better current account, markets would improve, everything would happen. So watch, you know, oil prices, that's very important. Second, there's a lot of feeling that RBI would start a accommodative interest rate regime, and that will spur growth, investment, and everything will be taken care of itself. I'm not hopeful of that. I think we'll get a 25 bips correction, maybe a 50 bips correction, but not beyond that. Banks, as I speak to you, are raising the deposit rates, all right? Given our current account deficit and fiscal deficit, there's very little room to cut interest rates, unfortunately. So I think those people thinking that rates are going to start coming down sharply in India would probably be misled.
No, and if you were looking at as an investor, let's say at corporate performance, corporate profitability, which also could act as a trigger to a market, to a market as a whole, what's your sense then?
That's the point. Given the constraints of what the budget is operated and what they've laid down, I can't see the investment cycle kicking off big time out here because interest rates are not going to come down, and there's nothing in the policy front that allows you risk taking. The government is not cleaning up its financial house. It is not encouraging people to say buy or take the risk. So I think 2013 is a tough year.
So you also said that people should look out for paper, or rather the government should really release fresh paper through the initial public offer route and so on. And you said that young people should really invest, and there should be other things that should be done for them. What are the kind of, assuming that will come or it will take its time in coming, what do you think people should be looking at to invest at this point? What are the are there sunrise industries? Are there new things to look at? New themes?
Media seems sunrise, to me. I'm quite bullish on the sector because if you look at the rates are very cheap. The market caps of Indian media companies compared to, say, other emerging markets, say in Indonesia, or say the global majors, is very, very cheap. We're actually throwing away our media industry right now. The more important point, Govind, is that there are triggers for change. The digitization bill is a huge trigger for change. That will change, any industry that is digitized has created huge winners and losers. For example, Apple. It killed Sony and moved up thanks to digitization. You look at the stock exchanges, a paper-based stock exchange, the BSE and the NSE. NSE came and took market share away because it digitized. So that digitization is now coming to the media industry. It will create huge winners and losers. The bill has already been passed. The country has finished phase 1, phase 2, phase 3 rolling out. So I would look at that industry very aggressively over a period of the next 3-5 years. I don't know, nothing's going to happen in the next 2-3 quarters. But revenues will start increasing, profits will start increasing, and suddenly the market caps won't remain that cheap.
Okay, so that's one. Anything else?
We always look, we are creatures of the market. I'm always invested in the market, but I think two sectors that are immune, relatively speaking, from the Indian downturn, the macro problems, are of course technology and pharma. So, those two sectors are more mature sectors. I think they will produce market-beating returns.
Okay, what about infrastructure? Will you invest in Rajiv's company?
I tend to avoid those sectors because of, the reasons outlined here.
Okay. Sudhir, outlook for the year ahead.
See, in my view, you put the point about doing business in India and the ranking. And by the way, the finance minister again referred to it to say that we have to make doing business in India easier. But there is also a ranking on experience on interface with tax administration, and we do very poorly there as well. So in my view is, that today, at least the way I see our clients, the chambers, etc., nobody is really asking for any SOPs. All that they are saying is, number one, be very clear about your policies. If we give an enabling environment, I think there is enough opportunity in the Indian market. At least when I speak to foreign clients, to multinationals, all that they are asking is two simple things. Tell us what your policy is, whether it is on the sector or on tax, and give us certainty. If you assure these two, in my view, you will open floodgates of investment like nobody's business in India. I think India is a great opportunity which is being frittered away only because of this lack of clarity. And one comment which the FM made, again, I found it intriguing. He says, I have allocated all these funds. It's now over to the ministries. I can understand him saying it's over to the states because some of them are not governed by the ruling party. But to say it's now over to the ministry is a bit intriguing to say, okay, I've done my job. Now the ministries have to spend it wisely. I think somewhere that governance, that passion to say, no, we will ensure that every bang for the buck, every rupee which is collected from the taxpayers will be spent in the manner in which it should be. That confidence, that credibility alone is what is required.
Okay. Ajit, this is, we're staring at elections. Now, what could be the upside or downside from an economy point of view? And, let me also put that in context. A lot of people thought that this would be a populist budget. At least some people thought, not all, but some people thought. And it maybe the conclusion now is that it really wasn't a populist budget. So, A, could something happen after this? Or in general, what should people be looking out for?
Yeah, the elections are due next year, national elections. And typically 6 to 7 months before that, there'll be the election fever will be much more than what we are seeing now. You see, usually the elections provide a kind of a fiscal stimulus or a stimulus to the economy. So I think that impact will be felt. And in the run-up to the elections, I won't be surprised if this inflow of funds and perhaps a little bit bounce to the stock markets But more importantly, I think you'll see some consumer stimulus. So I believe the second half of the year is likely to see higher GDP growth, partly because of an election influence. And of course, it's always an open question. Elections in India are very exciting and keenly fought like cricket matches. So it's whoever wins, I mean, the voters always make a rational choice, but they do have an impact on the GDP. So,
okay. Ramesh, anything from a market watching the elections? Is that a area of overhang at all at this point?
It will become very soon. Rapidly, it will become as the months approach. The market has its favorites. I think you can figure it out without saying it on national television. But market has its favorite, who it expects or wants to see as Prime Minister at this point.
Right. Rajiv?
Yeah, I think definitely election is an issue, an event which is awaited, and people are expecting that maybe after that the government will probably take more decisive actions, whichever is the new government. So it's generally felt that maybe in the next 1 year, at least after 6 months, decision making may become slow. So I think for the corporates also, it will be very important that most of the important decisions get done, because then there are election codes and things like that, and there may not be any decision making in the government.
Right.
well, I mean, just to add to what Rajiv is saying,
yeah.
See, when the elections are announced, the code of conduct kicks in. So a lot of the projects cannot be pursued because that's seen as influencing the voters. So knowing that, the government, as we get closer to that date, is likely to start clearing a lot of funds and clearing a lot of projects to make sure they are completed or at least initiated before the code of conduct. And that's the stimulus.
Licenses may be given.
Yes. So that's the kind of stimulus.
Yes,
perhaps.
Two of you gentlemen are in the fray in some way or the other. Any more last questions? Okay, last, yeah.
सर अभी जल्दी में ही अगस्टा वेस्टलैंड का जो हेलीकॉप्टर घोटाला सामने आया, स्कैम सामने आया, उसके बाद पी चिदम्बरम ने जो रक्षा शोधिका है उसका बजट बढ़ा के 2 लाख कर दिया, जबकि पिछले बजट में वो 94-93 लाख की समथिंग था. ये क्या गुड इंडिकेशन है?
So the question is, I mean, why increase allocation to defense when there are scams being unearthed?
No, I think the scam is a totally different thing. I mean, that's related to... See, by the way, nobody is questioning the quality of the stuff we are importing. Whether it's the Bofors gun, one of the best in the world, I think, or whatever the chopper. So what is being questioned is the modality. So let's not confuse with the preparedness of our military strength and the modalities. And if you take as a percentage of GDP, India is actually much lower. Not just lower than Pakistan and China, but even among global averages. So, I don't think there is a question of sort of not having adequate preparedness for defense for a large country like ours.
A fourth of it goes into pensions.
Yes, I mean, the other
I don't
issues,
know what I mean, I'm sure it's not the same.
Yeah, I mean, in the military, that is defense forces, also railways, we actually pay more people for pensions, retired people, than active service. But, that's the nature of the armed forces, that by 40, 45, 50 people can retire. We can't grudge them. That
no, we're not grudging them. Just pointing out a statistic.
Yeah.
One quick round as we come to an end, Rajiv. One thing that you took away from the budget that you felt was good. Just one line. That's something that unusual you spotted and you liked.
I have to think, maybe that the deficit is contained to 4.8% seems to be
that was a surprise. Okay.
Factor.
Okay. Ramesh, anything that surprised you on the positive?
Yeah. That Mr. Chidambaram is delivering the budget and that he says 4.8, I think he'll deliver 4.7 because he knows that is a figure the world watches. And I'm very sure that the math may be a bit spurious right now, but he will get to that 4.8 figure.
Okay. I think broadly stability in tax rates, which is good. As I said, in tax, no news is good news.
Okay. I think several positives. Let's be fair to the FM. First of all, the scrupulously following the fiscal consolidation program, at least in the numbers. Secondly, like they say, do no harm, Hippocratic oath. So at least no 70,000 crore loan waivers, because as you said, pre-election year populist pressures. Thirdly, lots of small announcements, which if you take them together, they add up. For example, in the CSR, the bill that's coming, he's said that if a company spends on R&D and incubators in universities, I mean, that could be potentially a very big boost to R&D and
it's also a way of allowing companies to spend their CSR budgets more innovatively.
Then the focus on, the second chapter of the economic survey talked about India's demographic dividend. And for that, we need two things. We need to improve our business climate, and we also need to ensure there's proper skilling and training and vocational education. we saw a lot of the reference to this measure.
Which has never been there in the past.
Yeah, so I think, let's be fair to him. They're very positives as well.
Right. I think that's a good note to end our discussion today. We've looked at the gamut of issues that emerged in the budget. I think we've got some very good suggestions ranging from capital markets to tax to economy to, of course, infrastructure. And you had some great questions from our audience here. Thank you all for coming and thank you for joining me. That's it from me at the floor of the Bombay Stock Exchange. Saying goodbye to you.